What if I told you there is a legal way where companies offer to buy your shares at a premium and retail investors often get a better deal? And from 1st April 2026, one important rule has changed. If you don't understand this properly, you may miscalculate your returns. So today, let's break this down clearly, step by step, with no confusion. A share buyback is when a company buys back its own shares from existing shareholders, often at a premium price. Company rewards shareholders by purchasing shares directly. There are two types of buybacks, and this is very important for you to understand clearly. First, open market buyback. Company buys shares directly from the market over a period of time. There is no fixed price, no special category for retail investors in open market buybacks. So here, there is no retail advantage. You are just another participant. Second, tender offer buyback. The company offers a fixed price within a limited window, and this price is usually at a premium compared to the market price at that time. This is where the real opportunity exists for retail investors like you. So always check this first. Is it a tender offer or an open market buyback? Your strategy depends on this. Now let's understand what changed from 1st April 2026. From 1st April 2026, buybacks are taxed as capital gains in your hands. This means you are taxed only on your profit after reducing your purchase price from the buyback price. Let's understand it with a simple example. If you bought shares at 1000 rupees and buyback price is 1200 rupees, your gain is 200 rupees and tax is applied only on this gain. There is no TDS deduction on the buyback amount. You pay tax while filing your return. Now let's cover practical use cases that you should understand. Case 1. Your shares are fully accepted. You pay tax on the full capital gains. Case 2. Practical partial acceptance. Only on accepted shares. You pay tax. Remaining shares will get credited to your demat account. Case 3. No shares accepted in an unlikely event. There is no tax event. But market price may move after buyback. So outcome still matters from return perspective. Case 4. Holding period matters. Short term or long term decides your tax rate. Case 5. Buying just before record date. This depends on entry price. Now let's understand the retail category very clearly. In a tender buyback, investors with holdings up to 2 lakh rupees are in retail category. But how is this calculated? This is where most people make mistakes. The value is calculated based on the market price at 3:30 p.m. India time. That is the market closing time on the record date. So the closing price on that day decides whether you are in retail or not. If price increases sharply, you may cross the limit without realizing. Always be conservative. In other words, stay slightly below 2 lakhs limit to be on the safer side. One more critical point. This 2 lakhs limit is calculated per PAN card, not per broker account. So if you hold shares across multiple broker accounts, everything is combined under your PAN card. In other words, you cannot split holdings across brokers to stay under the limit. Now, why does retail category matter? In most buybacks, a portion is reserved for retail investors separately. The acceptance ratio is often higher compared to the big investors, which means retail investors may get better participation. But remember, buybacks are not risk-free. There are real risks. Share prices can fall. Acceptance may be partial. price may drop after record date. So don't focus only on the premium price, look at the full picture. Let's quickly recap. Buyback means company buying its own shares, often at a premium. From 1st April 2026, tax is on capital gains. Only your profit is taxed. No TDS deduction, cost deduction is allowed, tax depends on holding period. Retail category means up to 2 lakh per PAN card based on closing price. The content at this video is for education purpose only. Stock market investments are subject to market risk. Returns are not guaranteed. Please consult a SEBI registered advisor before investing. Now, I want to hear from you. Have you ever participated in a buyback before or planning one? Drop your thoughts in the comments. If this helped you, share it with someone who may get benefited. And for more personal finance content, subscribe to the channel. I will see you next time.